So I'd like to hear, so let's start from the GDP numbers, 1.95%. What are your thoughts?
Well, for me, one of the most non-negotiable economic benchmarks is the fact that your economy must grow at or even higher than your rate of population growth. That hasn't happened in Nigeria for 3 years, and it's a source of concern because our population is supposed to be by 2050 will be the third most populous nation in the world. If we're not careful, our population, which hitherto had been an asset with creating market size and opportunities, can now begin to become a liability. We found ourselves in a situation whereby after coming out of the recession, first quarter this year, the economy is a slowdown, there's contraction. The trajectory is now downwards in terms of GDP growth, which is a source of concern for everybody because a lot of effort has gone towards trying to bring the economy back into growth mode and at least hit the 3% figure, which is a figure of our population growth. So why has that happened? That's the question we need to ask ourselves. First of all, the fact is that the budget has not been passed, and the necessary stimulus we're expecting from the capital expenditure from the government has not come in. We've had some issues with interest rates, as you know, they're quite high, which does not stimulate industrial production or manufacturing production. We've resolved those issues, and gradually the stimulus necessary has not been there. So are we looking at the fact that the rate cuts is coming a bit too late? Because of course, you know, there's some indicators that are leading and there's some lagging indicators. From all intents purposes, it's taking us 2 years for inflation to come down from 18.5% or 18.2% down to about 12.5, 12.6% today. So we do have some major challenges because unemployment is also about 25%. So the vulnerability of the economy, especially with the growth recovery, has now been highlighted, and we're looking to see where the stimulus will come in to be able to restore and sustain that growth.
That's a key word that you've mentioned, the stimulus, yeah, and you talked about some of the government policies, especially on the fiscal side, aimed at driving or boosting economic growth. And there's one thing we've talked about on all our shows, and that is momentum. It doesn't appear that we have enough momentum. Yes, there have been several policies, especially in key sectors, especially labor-intensive sectors like agriculture, but it just seems like none of that has been able to quite move the needle to get that, you know, that momentum, that stimulus that is needed. And I know that the central bank on its own has, you know, playing, you know, a part of the role of the fiscal authorities through its intervention schemes, especially also in the agriculture sector. So I'm just wondering, what is it that we need? Do we need more time? Because I've spoken to a number of analysts, and some say, look, yes, there's been a contraction. It's a slight, they say it as a slight setback, but we should continue on that trajectory, and time is what is going to help us get to that 3-4% growth.
On the long run, we're all dead. That's what the economists say. And I think we need some sort of solution within the next year or two. I think it's important that government should review some of their policies and come up with new policies that can actually create the sort of stimulus that we need. Now, Treasury bill, last year, for instance, government, because of the high Treasury bills rates at about 18%, was using about 60% of its revenues to service debt. Clearly, that was not sustainable. Now, with the sort of budget, we're looking that figure is down to about 30-35% of revenues towards debt service to finance the government deficit. We need to grow this economy. We need to be able to put some sort of stimulus for us to have inclusive growth and move this economy and this country forward. That's without a doubt. So I think it's important that we begin to look at least 100 basis point cut from this monetary policy meeting
today
to be able to create that sort of stimulus.
But would it 1%? Some might say that, look, 1%, I mean, would that actually trickle down to
will.
High interest rate environment?
It will, because Treasury bills that were trading at 18% last year down to 14% in January. Today, Treasury bills are at about 10%. The commercial banks have also come down on their corporate lending rates to between 17 and 20%. Non-corporates a bit more. And that was from a high of about 30 for non-corporates. So the general trend, I think the financial markets have already begun to anticipate this move. And you can see the general trend of interest rates coming down. If inflation continues its downward trajectory at the rate it has been for the last 2 years, we should see single-digit inflation by the end of the year. So what that means is that the stimulus is needed now to be able to see the effects by the year end.
But the MPC believes that, short-term fiscal outlook is expansionary, and they believe that now the MPC cannot itself also be expansionary. I mean, they're talking about inflationary threats going into the election cycle. That is still, we've talked a lot about that, but that is still a real concern for the MPC, and I imagine that that is something that they would mention today. Some of the members of the MPC have actually expressed that concern, so I'm thinking that could also feed into the ultimate decision today not to cut rates, because they're thinking to themselves, if we do cut rates, what happens going to the end, towards the end of the year? We might see inflation going back up, as we see fiscal spending and elections, pre-election spending.
I don't see that as, I see that actually as a stimulus, because the sort of inflation that you're looking at with that sort of spend, I think will be some sort of stimulus to the economy. But I think the trade-off at the end of the day is between, do you want to have some GDP growth to be able to grow your economy and to be able to maintain the 180 million people we have here in an inclusive and sustainable manner and reduce your employment at 25%.
I think that's going to be the key decision for the MPC.
Yes.
For them. But they've been in similar situations and they haven't chosen that path. They've chosen to keep their eyes on inflation. They've chosen to ensure that capital flows keep coming into the country.
We need to move away from that a little bit, and because we need to look at that indicator. It's a serious warning signal, because if this economy begins to tank back into a recession, then the consequences will be more dire. And I think this is the time to be able to make that change and trade-off. The central bank also needs to begin to focus on unemployment and inclusive growth as part of its priority for financial stability, which it has done a very good job on. But eventually, you're going to have to begin to put your eyes on growth.
Okay.
Because